Good morning, friends. We are at our 10th episode here at Turn Rows to Revenue. I'm JC Carroll. We have Boy Brooks over here. And how you doing today, boy?
A little chilly this morning in South Carolina, JC. It's cold pattern kind of keeps hanging on, so we'll take it for May. It's not too bad.
Not too bad. I tell you what, across the southeast, the last few days we've got some well-needed, timely rain. Past couple of days, not any of that 4-inch downpour where we have a huge runoff, just a nice, slow, steady rain and some
Yeah,
cooler temperatures. And it was right on time for a lot of the corn here.
yeah, for sure. Been a good week weather-wise.
No doubt. Been an interesting week, Boyd. We had the WASI report come out yesterday. Was it everything that you thought it would be, or on my end, it was really interesting to. I feel like the USDA has had some missteps on reporting information, and I want to get your thoughts on the whole report, but how you felt like the USDA has done in this, I guess, new commitment to better information for our growers.
Yeah, so this is the first official look at the 21-22 crop year. So it's fairly uneventful from a acreage and yield standpoint on this May report because basically they just plug in the numbers from the March 31st planting intentions, and then they're going to use a trend line yield for those crops, which at this point, that's about all you can do. So some of the pieces that you could look at and say I might want to argue with or have an issue with would be some of the demand side of things.
Mm-hmm.
For instance, in corn, they cut the exports for next year by 225 million bushels. But with corn at $6 for new crop, you would think that that would slow some export demand. So that's really not a big issue. They had carry out of like 1.5 for new crop on corn, which was a little bit above the trade guess, but like I said, with that export demand cut, that makes sense. They did raise the ethanol demand, so it looks like those margins are back, and with crude back at $60, that should stick around for a while. Everybody getting back to normal and driving more, and so we'll have some more fuel demand. On the bean side of things, they lowered the exports from this year to next year. Carry out came in at 140, which I went back a few times, and that's about the tightest I could find for an initial May WASDE report at 140. That's extremely tight, and that was with a 50.8 yield, I believe. So that's the trend yield. So yeah, there's really not much room for error there on the bean balance sheet if we were to run into any type of weather issues. The cotton was interesting to me because it pegged the carry out at I think 3.1 million bales, which would be the lowest in 5 years, 6 years, somewhere in there. And so, we've heard reports of guys planting more corn in the South. So you have to think at some point that acreage number probably comes down a little bit on cotton, which could tighten up that balance sheet even more. Um, Exports were off just, I think, 500,000 bales, so it wasn't a huge adjustment from this year. So, yeah, the cotton was the one that kind of caught my eye on that as far as maybe some potential fireworks as we get into that June 30th updated acreage number.
I feel like that cotton peanut rotation on some of the land we have here in the South that's just cotton peanut land, man. It really has some work to do. Both of those uh, commodities need to buy some acres, and I mean, it's definitely too late for the peanuts as far as our contract price that we set. I felt like that was pretty low when it came out.
Right.
But again, I've said this before, but I think that overage on peanuts, if everything else is significantly up, it's going to be maybe not a number that we've have seen in the past, like in, I think it was 2011. But
It's 750 or something back then.
it was like
800.
1,000.
It was crazy. Yeah.
1,000 a ton, what some folks forget.
Yep.
But I think that but it'll be significant, and both cotton and peanuts, that those markets, well, the cotton market, I feel like is just gonna be a more after planted acres, and a few more reports down the road, we'll see that kind of come along.
Yeah, and the cotton really hasn't moved a lot. With this last run up, 2 week run up in corn and beans, the cotton's just kind of been hanging around 85. So it's not really trying to compete for those acres. But, overall for a first report from the USDA, I didn't have any huge gripes about it. You can go back to last year and we had on the May report, a 3.3 billion bushel corn carryout estimate and 600 million on beans. So
right,
those numbers that they gave us yesterday are probably not even going to end up being close when we get to the January final report. And obviously there's a lot of things in there. So what to watch for market wise, I think is, the beans should probably be pretty well supported in new crop versus the corn. The corn kind of rallied and took that ratio down to like a 2.25, and now it's back to like to mid 2.3s. So, beans at 14.22 made a contract high yesterday after the report and backed off, I don't know, about 30 cents from there. The corn is about 50 cents off its high from Monday in the December contract. So, this might be what I was looking for as far as a place to really start watching more carefully. Not
right,
saying that we got to go sell it all today, but I think it's time to really start sharpening our pencil and maybe even throwing in some target orders above this market, especially in the corn. Because I think that if we see China continue to cancel some of this old crop and roll it into new crop, we think the weather looks pretty good. It's supposed to warm up next week. Some of that corn will be jumping. Planting progress ought to be, I don't know, 85%. So it's kind of lining up with what we thought our initial time frame was by mid-June, trying to get some of this stuff priced. Because I think, we're going to see an increase in corn acres on that June 30th report. And so if we take corn acres up, let's say just to 94.5, that gives you another 3 million. And at a 180 yield, that's another 500 million bushels of supply. So all of a sudden that carryout can be closer to 2 billion bushels, which historically means corn is worth 4 to 450. So just be real careful on the corn and start to really look at those levels. And technically we're still in a pretty good trend up. So I don't think that it's quite over, but I'm more willing to sell rallies in corn today than I was last week.
Now, Boyd, whenever we're talking about just that corn market, my thought is, of course, we could still see some weather concerns. And I guess that crop in Brazil, the second crop, what I know that they were talking about that in the report too yesterday. You felt like that number was in line, and if that continues to dip and does fall below 100, do you feel like that's gonna, I guess, significantly influence the corn crop, or do you feel like most of that's already bought in?
I think most of that's probably priced in because a lot of the private analysts are already under 100 million metric tons on that crop. A lot of folks are in that 95 to 98 type range. The question with that is how much does China continue to buy in the short term? For instance, this week on the export sales, they canceled about 20 million bushels, but bought more than that in the new crop marketing year. So they're kind of playing this inverse and canceling some expensive stuff and buying it back cheaper when they might need it down the road. So I think that will continue to see to be the driving factor in the corn. Brazil's going to have a domestic market that's going to want those first bushels. So you probably won't see any significant exports from Brazil for another 3 weeks, at least, maybe 4 weeks.
Got it. I'm with you. Now talk to me a little bit about local basis here in the Southeast. How do you see that continuing, and just take me to the next 3-4 months on that, on your thoughts, if you could.
Yeah, so what I've seen recently is some of these end users starting to buy some more stuff for June and July. They were trying to kind of wait and see if this basis would break and see if the futures would break, and it really hasn't happened yet. So there's still going to be a big demand for those August bushels. And today you've got that September contract about 27 cents over the December. So like we talked about previously, if you can move those bushels at harvest, just watch your local bids and calculate that, shipping it at harvest versus holding it, put it in the bin and shipping it in March, because it may make more sense to ship it early. And then you could always look at some type of re-ownership, buying some calls back or something if you were bullish the market. But at let's say a 60 over basis picked up at the farm, I mean, that's 670 corn when we thought we might get $4. So
right,
maybe one of those you just take it to the bank and move on.
That's right. Bottom line, I mean, just reading in between kind of the words that you're saying, as far as corn goes, if I'm sitting across the table from you and I've got corn to price, I'm going ahead this week and getting a little bit of that done.
Yeah, like I say, I'm not gonna sell it all at the market tomorrow or today,
right?
But I'm definitely looking for a day that we come in and the forecast is drier and market's up 15. Yeah, we ought to be looking at that pretty hard, I think.
Gotcha. And with soybeans, feel like it still's got some legs, and we can
I think the bean
sit
market,
our hands for a minute.
I think the bean market's a little different. We're starting with a 140 carry out with a almost a record yield projected. So
right,
we probably will pick up a few bean acres in that June 30th report, but I don't think it's going to be a significant increase like the corn. So yeah, I think we have some legs there, but again, start looking and see what we do when we challenge that contract high up at like 1460. If we start to fail up there, then we probably ought to look at getting some beans on the books as well.
Yeah.
Cotton wise, I think that thing's going to be very well supported outside of a general commodity meltdown. And that's, the other thing that we've seen the past few days is with this inflation print on the PPI and CPI, that kind of spooked the stock market Tuesday, Wednesday. Does this money flow start to change a little bit? You've seen lumber kind of come back off its highs after having like 7 limit up days, and you've seen copper kind of weaken a little bit, and you're starting to see some Chinese products like steel and coal, at least in the future side of things, start to correct. So the cotton may be more influenced by the outside market pressures more so than the actual fundamentals here in the next 6 weeks.
Gotcha. Well, I appreciate this insight. I know all of our growers are just kind of thirsty for what to do and when to do it. So let's continue.
Is the important question. So
yeah, when exactly. How much? How often?
That's right.
I mean, it's hard to look at the market and not pull the trigger.
Yeah,
on some of this stuff. And honestly, man, it was hard to look at the market a month ago and not pull the trigger.
Absolutely.
So
absolutely.
And even prior to that,
Well,
I don't think
that's what made this year somewhat different, and what I told my folks was, in a normal year, you want to be selling every 20 cents up in corn, and just clicking those off. But when a market's moving like this, I'm more patient. Not that I saw, 750 corn. I sure as heck didn't see that. But when you get the money going and the weather and everything's moving together, I try to be patient and let it go where it wants to go, and then be more aggressive on those sales when we see signs of at least a short term top, I think.
All right. And a lot of guys outside our industry are learning about our price increase, and I've gotten some calls from friends that just don't know. I'm like, man, your farmers are about to really kill it, and I hope so. But I know that right now is when you have to be paying the most attention, because
Right.
as soon as this thing turns around the other way, the input costs for per acre are just right behind these commodity prices. And as soon as we take a hiccup in one, does not mean that the hiccup is going to be in input costs. It's going to take a long time for those to react to these prices. It's amazing how fast they run up with them. And it's also equally as concerning how long it takes to fall back off of
Correct.
that. So when it's volatile like this, even though we've seen the good side of that, let's pay attention and not step in it on the way back down here.
Yeah, 21 is going to be the easy one, right? Most guys had inputs locked in. 22 is going to be the one that you're going to look at your budget on corn and say, man, my cost went up 75 cents a bushel.
Right.
And all of a sudden, a 450 corn or a 475 corn is no better than a 375. And
That's
the
right.
same thing is going to apply in cotton as well. So yeah, we've definitely seen fertilizer increase, obviously, and land rents going up. I mean, because everybody just wants to grab their piece of the pie. But yeah, you got to start really honing in on what those cost structures are going to look like, especially for next year.
That's right. Just to say real quick, we've been focused on the market with this episode, but we're still looking at this new administration and exactly what policies are coming out. One of the things that was interesting to me in this past week is they've taken the 30 by 30 plan that we've been talking about and changed the name of it to America the Beautiful plan. It's almost like putting lipstick on a pig.
Well, it sounds a lot less abusive, if you will.
That's right. It doesn't sound as more goal oriented,
Right.
to grab 30% of the land. And I'm not saying that's for sure what it's going to be, but as far as land rent and things that may be affected by that, it's important to watch that. Another policy as far as crop insurance policy change that we're learning a little bit about is they're considering at the RMA changing the PRF program, which is pasture range land and forage. Now that could affect a lot of our growers that also are raising cattle and feeding hay. We're going to be in front of that, but if they do what they say may happen, it's not going to make that policy as attractive as it has in the past.
Gotcha.
Sounds like they're going to limit our months that we can protect and just make it more of a summer type of rainfall index as opposed to a year-round rainfall index.
Okay.
But we're going to be paying attention to little things like that on my end, and sure are counting on you for all you do on the marketing board, and we appreciate it.
Absolutely.
Well, let us know if there's anything we need to know, and other than that, man, have a great day.
Talk to you soon.
Take care, buddy.